All right, everyone, that was one heck of a Friday. We got to talk about those numbers we got, where we could potentially go from here. I have that commentary for you. We'll also take a look at the charts. Also, BigBear.ai stock, Apple stock, PLTR, and SOFI. I'm going to keep on reporting on those as they continue to be extremely interesting, and they should offer some significant opportunities to us in the coming days. So we're going to talk about all that in this video. Tomorrow, 2 p.m., that's September the 6th, is my next options workshop. This is for the beginner options out there, for the people who want to know what calls are about, what puts are about, how they can outsize the alpha in their portfolio, really amplify it, and then also the risks that go along with it as well. So if you want to know about options, you can click on the link description, use code word money when you sign up. The details are here. You can also sign up. There's only 6 seats left as I record this video here, so make sure you take advantage. And also don't forget about that code word MONEY, money. It's going to save you when to sign up. And if you also want technicals and crypto workshops as well, they're happening this weekend with Crypto Will and with StockMo. That bundle deal is also there for you as well. Code word money is also going to save you cash on that when you do sign up. So guys, I want to get into some of the other things that we have here, such as the numbers. Let's talk about those. And there we go. And we're going to go back to the calendar that we have. We'll talk about the numbers that we saw. Quick recap. So ISM manufacturing came out a little bit low, but once again, not so bad. Jolts came out a little bit low, not so bad. ISM services actually came out higher than expected. And some other numbers that came out, once again, not so bad. Non-farm payroll happened today, and it kind of made me like grit my teeth a little bit, like, not so bad, but also not great. Unemployment rate also up to 4.3. And I gave commentary on that. If we come in at 4.3, I don't think the market tanks. I think, once again, that could still fall in that range of not so bad. And one of the things I want to dig into is the unemployment rate itself, because we got 4.3 now, mind you, triggering the SOM rules, showing that we are in a recessionary environment. That is something that we definitely want to pay attention to. Now, mind you, we would have to be in the upper side of the mid fours in order to have that by the time that December rolls around. So if we're in that 4.5, 4.6 range, that's where things start to get troublesome. We got 4.3 right now. 4.4 today probably would have been immediate downward pressure. I'll talk about what we saw in the market and what I did about it and how exactly it went as I continue to trade those zero DTEs. I didn't have a lot of opportunities today, just one of them. And well, like I said, I'll show you how that went. But here's what I want you to see about the unemployment rate as we look at it. When you look across here, you can see this flat top that we have 5 different months at 4.2, couldn't break above it. We finally did. We'll stack this on top of the other numbers that we have, and it's like, well, yeah, that kind of makes sense. Everything else was a little bit soft. Unemployment makes sense for it to be up just a little bit from where it was at before, and that means that the Fed could be cutting those rates just in time. Now, a few other things before we move on from unemployment rate, before we get to the federal funds rate and what things are looking like and how it goes along with the stock market. If we go out to the 3-year, you can see that rapid climb that it looks like we're having, and the Fed attributed this to normalization from the pandemic. So let's go out to 10 years and include the pandemic. Now, this chart will give a flattening effect because this is so darn high right here. But this 4.3, we have to go all the way back to 2017 before we can see that 4.3 number pump out. That was September of 2017. And we even had a lowering unemployment rate during that time prior to hitting that pandemic. So we were in fairly good environment. They talked about some normalization that we were expecting to see, some correcting back the other way as the unemployment rate was rising. And like I said, once we start if we start creeping up, so the next time, if we go from 4.3 to 4.5, that'll be kind of yucky for us. If we go 4.3 to 4.4, even that sort of could be, once again, it goes along with the entire narrative that we're putting out. But with these not so bad numbers, what that does imply is still it reaffirms the idea of a soft landing, that the Fed is going to come in a timely way with their cuts. And we look today, now mind you, I look midday today, we had an 88% chance of having a 25 basis point cut in September and a 12% chance for a 50 basis point cut in September. It settled on 90 to an 8 as of right now as I record this video. This will fluctuate all the time, so it is worth pointing out that these are just the current numbers right now. The things get really exciting when you look at December, because the market's going to look into the future on these things, not just the near future for September, but longer than that. And what we have for that is that we have between these two bars here, like a 72% chance, so 3/4 of a chance pretty much, in order to see ourselves down below that 4% mark for the federal funds rate. So what the market is saying, they're like, we got reports that weren't good, but then again, they weren't so bad that the market should just completely sell off and it should be disastrous. So you'll notice we didn't see that. We saw a soft sell-off in the Qs, for example, and in SPY coming off the peaks that they had going into the market open this morning, but once again settling a little bit from where it was at. That brings us to the next catalyst, which happens to be on September the 9th. Happy birthday that day to my father. As a matter of fact, between me and my wife, 3 out of the 4 parents involved in that have birthdays coming up here in September. So on September the 9th, if we go back to the calendar, there we go. What we get on Tuesday at 10 a.m. are non-farm payroll revisions coming in here. So we want to see what that revision looks like and what that can be with those revisions, rather than going from partial data and extrapolating from there like we get with things like non-farm payrolls with the revisions to come in later. We look at more complete data, and that complete data should give us a better picture of the environment that we find ourselves in and give us better positioning. So that's on Tuesday this coming week. And so that means that Monday could honestly be a little bit softer. If Monday's fine, then maybe Tuesday morning lead up to that 9:30 is a little bit nervous. If those revisions come in healthy, well, and healthy revisions meaning that they come in that we're better off than we thought, or we're about where we thought. Either one of those things is fine. 2 out of 3 ain't bad. Thank you, Meatloaf. Or was it John Steinman? Was that just named the guy who actually wrote the songs for Meatloaf for the Bat Out of Hell album? You guys can let me know down in the comments for that one. Music trivia, I know a lot of it, but let's move on. Steinman? All right. So in any case, 2 out of 3 ain't bad for those non-farm payrolls. That's if we get the beat, meaning that things are better, more jobs than we thought. Excellent. At expectation, fine. If we end up seeing things are much, much worse than we expected, there's your negative catalyst. That would be the thing that kind of might at least snap things near term. We'll have to see what it looks like in context. But right now, that narrative the market is going with, not so bad, and hey, we got cheaper money coming our way if the Fed is going to do their cuts like we think that they will. So we're going to have to watch that. That also puts pressure on this calendar on what we have coming up for inflation on Wednesday, September the 10th, and then also on Thursday, September the 11th, with the CPI numbers also coming out. We would like to see some subdued numbers there, and as long as the inflation numbers that we get do come out to look not really so bad as well. Once again, a little bit high is okay. When they start to go rampantly high, that's bad. If they go low on us instead, the market will probably absolutely love that, because that gives the Fed even more reason for that easy monetary policy, because inflation would be low and labor would also have a lot of pressures on it. So it's like, hey, I guess it's okay to ease our monetary policy and allow business to flourish a little bit more, make cheaper capital or in the market, pass things around a lot more, and that could be a very good thing, like I said, for the market. So low inflation to pair with the not so bad but also not so good numbers that we got for jobs, that could be a perfect combination, making it an easier time for the Fed in order to be dovish, that those pressures just aren't showing up how we thought they would from tariffs, for example. So it could be a September to remember. I still stay very hopeful from where we're at right now. That possibility is still there. And I will say the market probably has a little bit of that hopium. I don't really like that word too much, but if you do, that's all good. I just, at this point, it starts to feel cliche to say that, but I think that the market is going to go just that bulls on parade until it finds out that something snapped. And then I think that's when our general direction from up would change to down. And I don't know when that happens, but that's why we're on here while we're talking about the economic reports, watching the technicals, and I'll bring that all to you. Michigan consumer sentiment on the 12th, by the way, is also going to be impactful to us. Watching for what it says for inflation and also the state of the economy, because that expectation, that sentiment is something that really can impact the markets, because it can impact the spending behavior of the population. So let's get over to the charts on this thing. Let's go over to the Qs, as a matter of fact, and the weekly chart looks super healthy. I said watch for the opportunities. Off the 13 is wildly it can be a wild opportunity from there. We didn't quite get down to the 13 EMA on the weekly chart, but man, we got close. So from this thing, we went all the way down to, let me see, that was about 559, all the way back up to 576. That's quite a recovery. So that, what's that, about 3% for the week. And if you're somebody who does options, that even gets more outsized out from there. Remember my options workshop, I can teach you all about it. So if we drop down to the daily chart, what does it look like? Well, we got a lot of buying pressure coming in off of the 5 and the 13-day moving averages. And that's perfect. These are the EMAs that we're looking at. There is a concern to watch out for, and that is the fact that the RSI is falling as much as it is. We do want to watch and see if that confirms down below 50 on the RSI, that the momentum changes on us, and we're down below the moving averages, the 5 and the 13. Maybe things could turn around for us. If we drop down to intraday charts, those are my day trading technicals that are on there. Please excuse them. I'll take them off in just a moment. I do just want to show you. Let's actually drop down to the 5-minute chart. You'll see it a lot better. There we go. because we had some beautiful moments in here in terms of day trading. Like I said, I was able to get one off early on. Can't do a lot of trading during the day, but I can totally cook up the technicals for these things. We're going to put VWAP up there. There we go. So you can see the dance that we had up above that previous resistance that turned out to be support for us. And as soon as that gave way, well, there's that trade downward. Let's take down the technicals and we'll reduce the noise that's on here because I want you to see very specifically on this 5-minute chart, although we'll even drop down to the 1 minute for this one. Take out a little bit or add a little bit of noise to it. There we go. On the 1 minute chart, doop 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 doop. There we are. 1 minute chart. Perfect, perfect, perfect. What was I looking for on here? Well, based on the numbers that we got, I thought that they were good. I didn't think that they were great. I didn't think that they were going to be something that would allow us to be wildly bullish from where we were at. And we kind of danced around VWAP for a little bit. And so I was ready when we were up around here. I was like, okay, well, we'll see if we can break this peak. I'm totally going long on this thing up above 580. If we get there, if instead we drop down below, you can see we hit this bottom band down here and then retested against VWAP and got rejected. For me, that was that trade entry. Unfortunately, as soon as we got to, it was about 10:01-ish, this thing pushed up high enough I had to tighten my stop because I wasn't able to track that trade. But look what happened when I went short on this thing. The timing was right. My stop, unfortunately for the situation I was under, I had to make sure that I closed out profitably because I could no longer track it. And it cost me a couple of grand, as a matter of fact, not to be of opportunity cost, of course. So profitable trade, only made a couple of dollars versus several $1,000s that were waiting for me for riding that thing down. I probably would have ridden it down until we got to about this area here. I don't know that I would have stayed in once we started to get this pop. And there's a lot of reasons why I wouldn't have done that. I would have gotten nervous right around here. I would have tightened up my stop. Maybe it would have stopped me out there. But certainly when we came back around and retested, especially when we start to get up against that, I might want to consider, I could leave my stop up there, but that's really giving a lot back off of that. But that would be one of those very good trades that going heavy on something like that, if you're able to give over that focus to it, could be a very good thing. So let's move on with some of the other things looking forward from here. So for the SPY, pretty much the same thing on the daily chart. That, man, we got a strong bounce off the 13 and above the 5, close above both. That's a bullish thing. RSI doing the same thing. That's getting a little bit subdued, a little bit of bearish divergence. Prices up, momentum down. We want to watch that. We want to keep an eye on it. We want to see if we're having that September to remember, or if we're going to get a September slump that might happen just a little bit later beyond this first week of trading. So that's what I'm watching for right now. The general direction is still up, and we don't have evidence right now that we should do otherwise. When we get into IWM, and look at that one, we got a pretty indecisive candle, pretty wide range on this one. Yeah, there's some weakness, but those Fed cuts can do a lot of things for small cap companies. So if we get further confirmatory news such as low inflation, and also if we get that labor market strength through the businesses being able to, we'll say, just keep more people on or add more people because the quantitative easing has allowed people to feel more wealthy, that's something that could be good for these small caps and that could cause further bullishness. So we definitely want to watch and see. That 248 price tag might still be in the cards. That's by end of year. It might still happen during the month of September. We're going to have to see. The jury's still out on that one. I will say for Bitcoin on the daily chart, there we go. We got rejected off the 50 EMA. It totally matters if we close up above the 5 and the 13 here as we tumble back down and retested support from that time. Closing above the 13 is a very good thing because, well, then we're closed above the 13, then we get another shot at the 50. If we close down below the 5 and the 13, so it closes down this way, that could lead to that further sell. And then we're starting to look down south from that, see if we can retest these lows where we got that buying pressure around 107, 108, or do we push down to closer to the lower 100s where we start to see 100,000 to 104,000. So moving on to Big Bear AI. I talked about this structure break. I said it looks like we're going to get signs of consolidation. We're still seeing that. I mean, it got pretty wild up to 507 and all the way down today, down to about 473. But man, like I said, we broke that downward trend that we were on. Now we're starting to get a lot of that low volume sideways movement on this thing. We want to watch for that volume to start to accumulate, and we want to watch for further structural breaking to the upside as a bullish thing, to the downside losing this support would be a bearish thing, of course. So that's what the update is for Big Bear AI. For Apple, we actually check this out. So as per the technicals that I have on here for you, there we go, getting a little bit of lag on my computer. On the technicals here, we actually did push up above 240 for a little bit, But you can see with the closing prices or even this opening price here at the 10 o'clock hour, opened right at about let me see, it's actually 2 cents shy of the 240.11. Couldn't hold those prices up there, sold back down, and just couldn't get back up above that. So that resistance that we have, I said we got to sit on top of it. If we do, we're up to 243.46. We got this trend line support so far coming up this way. Hopefully that's enough to keep on squeezing those prices up and get the bulls to finally push those bears back and over the edge so we can get that further appreciation. Palantir is even more exciting. There we go. Still trading in its range. Tried to peekaboo down a little bit down this way. It looks like we may have fallen out and retested on the bottom of this. Maybe there's a further sell in that, but there's a lot of support down here. I still don't know that I would call this range truly broken off of that little bit of a dip that we saw today. And this isn't my favorite trend line either as it's drawn. I would like to actually go back here and draw this, which would still actually put us inside of it. I would like to catch that bottom that's there. But I'll update those technicals this weekend. So for Palantir, still in that trading range. At the bottom of it, maybe that means that we have some room to the top. We're going to have to watch and see. SOFI. SOFI, there we go. By typing out those letters, you might be able to hear my 2-year-old daughter in the background. She's loud like I am, and I love it. So you can see the range that we find ourselves in, getting rejected. 25.68 is that number to sit on top of. Haven't really been able to do it for very long. If we can get up there, it opens up to 28. If we fall down below, I had it at 24.65. I'm actually going to drop that down all the way down here because that's where we're seeing those bottoms come in at 24.35. Seems like we're still getting buying pressure down there. That could send us down to that low 23 number, 23.12 that I have on the screen. Now, I just wanted to give an honorable mention to CLF. Had a beautiful day today. I talked about its outperformance. And I called this one going all the way back to this big jump, saying this is one of my favorites for outperformance. Back when it was about $7 per share. We're up over 50% from that time. And Restoration Hardware also gapping up today, getting that resistance around 253. I said if we can break over that 224 number, that 253 could be in the cards. We definitely got it. And there's even a further price tag. I don't know if I have it on screen. There it is. This thing I think could still push up over time. Maybe we see it by end of year, maybe we see it in 2026, but that 340 price tag, I think we could still have coming our way if things turn out favorably, especially if housing market starts to really take off. We saw some of the housing stocks really start to move. Restoration Hardware, or RH, could stand in line to really strongly benefit from that. They're broadening out from outside U.S. markets, and that was one of the reasons that it did as well as it did today. Importantly, if I take down the technicals, we're up above that 200 EMA. If we can hold on to that as support, now mind you, we'll probably break back down above it and probably cross again. That's my guess. But if we can hold that 200-day support, that can be great for us. That's the EMA. The 200 SMA is all the way up here at 271. So that'll be that next major resistance to the north for that one. So guys, it's a pretty exciting time to watch this stuff. It's a pretty exciting time to talk about it. You guys can come on over to that options workshop tomorrow. Code word money when you sign up. It's at 2 p.m. Eastern time. We'll go for about an hour and a half to 2 hours. Some of it depends on how many questions people ask, because you do get to ask your questions. There's also a 60-day forum community that you can be part of. You get the notes, you get the presentations recording, all of that stuff, and other opportunities that I find along the way. And you can, like I said, you can ask questions in the community. You can ask questions of me, all within that forum. You can also join us over at the Discord. Links down in the description for that. Code word doctor when you sign up. I'm one of the panel experts. You can check out all the trades that we're doing over there. Not just me, but the other experts as well. Stockmo as well. Big win today using options on Rocket Money, by the way, put out there by Stockmo. So thank you very much, Mo, for that one. A lot of people very happy about the way that one turned out. And like I said, if you don't know about options, that workshop is perfectly designed for you to teach you all about them and really getting you started in that world of options. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and I'll see you next video.